today. It turned out that it had nothing to do with my system or being me coming to Louisiana. It was an update to the software that prevented the microphone from working, so I had to get tech support and revert back to the old operating system. Okay, so Savvy says he can hear me. Everyone else, please just say yes if you can hear me. Just want to make sure that things are going well today instead of like last time. So hopefully he's not the only one who can hear me currently. I'll move this down to the bottom here. Okay, so it looks like everyone can hear me, thankfully. So we will avoid the nightmare of last week, which is good news. And I'll wait about one more minute here before we get started. We don't have a lot of questions, so if you have any questions that you wanted to send in, this will be to the email question and answer section. We might have time today to actually do some real-time wave adjustments, just because chapter 6 is the shortest chapter. So we're coming now to the start time, so I'm going to go ahead and get started. It is ironic that the shortest chapter in my book, which is chapter 6, is actually probably the most chapter of my book. Without the logic rules, what I call the post-constructive logic rules or rules of logic, the whole wave theory pretty much falls apart. It wasn't part of R.N. Elliott's original theory. It's not part of any book I've ever seen on wave theory, but it's the only thing that holds together the theory in a logical way and prevents one person's analysis from being, or prevents everyone from having different opinions about the market, because the market judges your analysis by how it behaves after a pattern finishes. So it's the most critical chapter in the book, so you need to make sure you understand it and make sure you always apply these rules when you're looking at wave patterns that you think might be a 5-wave move or might be an ABC correction or a triangle or whatever. So realize that when a pattern is finished, it has to behave, and the post-pattern behavior has to behave very specifically to confirm that what you thought was the end of a pattern is the end of that pattern. So let's go ahead and get started with that. So there's two different types of patterns, obviously impulsive patterns and corrections. So we're going to deal with impulsions first. And since impulsive patterns always go upward or downward, they don't go perfectly horizontal like corrections can. There's always an angle to the 2-4 trend line, which is the critical thing that you're looking for. So stage 1 in an impulsive pattern always occurs before stage 2, which is touching the 2-4 trend line. So if you have a 5-wave move going up or down, it doesn't matter. You draw on the 2-4 trend line, or what you think is a 2-4 trend line, and if it really is a 5-wave move, when wave 5 is finished, you're going to see the market quickly reverse and get down to that 2-4 trend line in the same amount of time or less, and usually less than wave 5 took to form. So if this was 10 days, this has to be less than 10 days, but certainly no more than 10 days, but it usually will be less. So the break of the 2-4 trend line needs to occur in the same amount of time or less, usually less, as what wave 5 took to form, and that's what I call stage 1 confirmation. So it begins to move you into a realm in which it's possible that your analysis is correct. It's not 100% certain, but it's a lot more possible than it was before that event. And if it takes more time to get from here, from this point back to the 2-4 trend line, then the 5th wave took to form. So this was 10 days and it took 11 days to get here. 100% certain this count is not correct. So in other words, wave 5 is, wave 4 isn't finished, the whole thing is not impulsive. Any one of those is a possibility. Can't say exactly which one because I can't see, beyond what I see right here. I don't know what pattern you'd be looking at, but it's going to be one of those things. Either wave 5 is not finished, and that would be your first choice. Whenever you're dealing with wave pattern development, you always want to take the simplest, smallest change answer first. So if you don't break down to the 2-4 trend line quick enough, you would assume this is wave 1 of wave 5 and you're currently in wave 2. If that doesn't make sense eventually, then you would assume that this is not the end of wave 4, it'd be wave A of wave 4, and that's wave B, and you're in wave C. If that doesn't work, then the whole 5-wave structure falls apart. So you start off with the smallest change. Instead of wave 5 being finished, it's just wave 1 of wave 5. If that doesn't work, it's wave B of wave 4. If that doesn't work, then probably this is a zigzag and this is something else, or maybe an X wave, or who knows what. So after you've achieved stage one confirmation, the next thing you want to see, and it dramatically increases the chances of analysis accuracy, if you get stage 2 confirmation. And that's when you retrace all of wave 5 in the same amount of time or less as it took to form wave 5, in the same complexity or less as it took to form wave 5. So if wave 5 is 5 mono waves, you want this to be no more than 5 and preferably less. So the complexity and the time of the 5th wave should be taken into consideration when you're looking for this confirmation stage, and you generally want to be less complicated, less time consuming, and more violent, but at least no less than what the 5th wave did going in the opposite direction. So if you were to take a mirror and place it right here, you want the mirror image of this rally coming down this way to be the slowest that the decline occurs and the most complicated and the most time consuming. If you have any questions about that, just go ahead and write into the question and answer section. Now there's more specific details about what can happen after a 5-wave move is over, depending on which wave is the longest. So there'll be additional things you look for. So if the first wave is the longest, instead of here the 3rd wave is the longest, but if the first wave is the longest, then you're going to want at the very minimum to retrace all of wave 5 in the same amount of time or less and break below the bottom of wave 4, but preferably and most likely the correction you get is going to go back into the range of wave 2. Not in this specific diagram, but if the first wave were the longest, wave 2 would take a while, and then wave 3 would be shorter, about 61% of wave 1. Wave 4 would correct, probably smaller than wave 2, and it wouldn't overlap wave 2. And then wave 5 would make a minor new high. And it would be in that case, it's more likely the correction will drop into the range of wave 2. If the 3rd wave is the longest, you generally want to get back toward the low of wave 4. It could be anywhere in this range, but the closer to the bottom of wave 4, the better. And it gives some specific details of things to look for here. And if the 5th wave is the longest, then you need to retrace wave 5 at least 61%. So these rules, in addition to touching the 2-4 trend line in the same amount of time or less that wave 5 took to form, and then retracing all of wave 5 if it's a 1st or 3rd wave extension. If it's a 1st wave extension, it's virtually certain. If it's a 3rd wave extension, it's like 50-50. If it's a 5th wave extension, it's not likely to retrace all of wave 5 in less time unless the 5th wave extension is the end of an even larger pattern. And it describes that here. It's saying that you want to retrace at least 61%, but unless the 5th wave is the completion of a much larger pattern, you may not get down to the bottom of wave 4 at all before the market recovers and corrects for a while. Okay, if the 5th wave is is concluding a much larger pattern, then you're going to retrace all of wave 5 again. If it isn't, then you probably won't. See. So this is talking about 5th wave failures. When the 5th wave of a 5-wave move fails, it's guaranteed you're going to retrace wave 5 completely in the same amount of time or less that wave 5 took to form, and it should be much faster typically. And you're also going to retrace the entire 5-wave move. It's not going to be just a minor event. So if you get it's weird the way these charts move around, but if you get a 5th wave a failure, see if I can correct the size of these charts here. Give me 1 second. Looks like that's as small as it's going to go. I think that's too small for y'all to see, so I'm going to go back to this. So if the 5th wave fails, in other words, it doesn't go above the top of wave 3 in the uptrend, or doesn't break the bottom of wave 3 in a downtrend, you're going to completely retrace wave 5 in the same amount of time or less, preferably less. You're going to break the 2-4 trend line, and this, if the fifth wave fails, you're going to retrace the entire 5-wave move, no matter whether the first, third, or fifth wave is the longest. Well, fifth wave can't be the longest if it fails, but if the first or the third is the longest, if the fifth wave fails, you're going to retrace that whole 5-wave move in less time than the 5-wave move took to form. So it'll be confirming some larger pattern and some larger structure. So this is the smaller 2-4 trend line here, but if the fifth wave fails, you'd have another channel for the bigger structure, which might be another 5-wave move, or could be a flat or a zigzag, but you'd have another channel coming in here, and you'd want to reach that larger channel in the same time or less as this 5-wave move took to form. And again, if that doesn't happen, then something is wrong with your count. So fifth wave failures are, a special situation, and they require very violent counter trend behavior to confirm that they exist. Let's go on to corrections. So when you're dealing with corrections, it's going to depend the confirmation process. Instead of it always being a break of the trend line first and then full retracement second, it depends on whether wave B is the longest correction between A and B, or if it's the shorter of the two. If it's the same, then it becomes an event where you're going to get to your channel and retrace all of wave C both at the same time. But if the pattern has a downward slope, or the 0B trend line has a downward slope, then stage 1 confirmation will happen first by breaking the 0B trend line. So if you're dealing with a zigzag or a flat, it's going to break the 0B trend line first in the same time or less as wave C took to form, same complexity or less, preferably less. And then the second stage confirmation will be a complete retracement of wave C. And this will happen if this structure is the end of something larger, like say you have a third wave here and this is the fourth wave. If this is the end of the entire fourth wave, then you're also going to retrace wave C in the same time or less as wave C took to form, same complexity or less. And it should typically be more violent, and it'll definitely be way more violent than the B wave that occurred during the corrective phase, and it'll cover more price territory. So you can just measure the B wave, add it to the bottom of wave C, and you know the minimum upside, and you're also going to want to break the 0B trend line and preferably retrace all of wave C. But stage 1 is required. Stage 2 is a maybe, depending on how serious this conclusion is and whether it's just wave A of a bigger pattern, or possibly wave 4 or wave 2 of a larger pattern. Now, when the B wave is larger than wave A, then it changes things a little bit. So you can't get to the 0B trend line before you completely retrace wave C. So the confirmation happens sort of in reverse, where the first thing you're going to want to see when the channel is going up like this and the correction is going down, that you want to have complete retracement of wave C in the same amount of time or less as it took to form, same complexity or less, more violent, and of course larger than this move here. And that would be stage 1 confirmation. And if this is finishing something important, which when a correction drifts upward like this, it implies strength. So you should expect it to get to the 0B trend line in the same time or less as the C wave took to form. That would be stage 2, and it would be near confirmation that at least this flat pattern is over, and that you probably have finished a larger degree. If not, then this would probably be an X wave, and you'd go into another ABC, and this would be a double 3 running correction. A double 3 running correction is a flat followed by an X wave, followed by another flat or possibly a triangle. And that whole thing shows a lot of strength, and the move after would be really strong, and it would be larger than whatever move happened before it. Even in this situation here, the upward drift of this ABC tells you move after this C wave if this is the end of the entire correction and not followed by an X wave. But if this is the end of, say, wave 4, wave 2, or something bigger, then the move after this C wave has to be bigger than whatever happened. This is a sign of strength. Imagine that, and I think I mentioned it to you before, the idea of imagining wave structure to be like copper wire that you could physically grab. So imagine that this flat pattern initially looked like this. So if you had an advance and your copper wire is going up like this, and it's going through this kind of structure and it's rallying here, and you could grab this with your right hand and grab this with your left hand, and you pull on this part of the wire, you pull it upward. As you pull it upward, it's going to stretch the pattern and it's going to start looking like this structure here. So the B wave starts to become larger than wave A, the C wave doesn't break the bottom of wave A anymore, and this will start being longer than whatever happened over here. So imagine these are like physical structures, and that behavior here is telling you the future strength is greater than the past strength. And these are very important concepts of neo-wave. It's not part of the original theory, but it's very important for the logical integration of structures and patterns. And this allows you to predict things that most people with wave theory cannot do. I don't know how many of you got my forecast today that I sent out to the entire database, but let me see if I can find that real quick. Give me 1 second. It's a link actually to a video. Yeah, it's a video. I have to pull up the actual forecast. Give me 1 second. Okay, so that'll be the S&P monthly, I think it was. I think it was this chart. Okay. That's not it. That must have been the half-yearly chart. Okay, so what I talked about in that video is that this whole pattern is drifting upward and implies long-term strength, and we're waiting for this D wave to come to an end. It looks like we're getting some kind of zigzag, at least on half-yearly charts. This is a very complex structure. It appears to be possibly a symmetrical, followed by an X wave, followed by a diametric, which is more obvious on monthly charts, followed by either a flat on a half-yearly chart or a neutral triangle on monthly charts. And now we're thrusting out of that. And on monthly charts, that neutral triangle is drifting upward. So the it's not drawn on here. Let's see. Yeah, here it is. Okay, so here is the neutral triangle pattern that's of a smaller scale that's very similar to the neutral triangle that began at the high in 2000. So the high in 2000, this whole thing has been drifting upward for 20 years. And this entire structure is sort of forcing its behavior down onto smaller patterns. So the way that this looks is exactly how it looks on the shorter term charts right here. This is almost the exact same situation. You could imagine this is the high in 2000, and we go through the correction, the upward drift. And so this is the same upward drifting neutral triangle in orange that we have on a much larger scale covering 20 years. On the monthly chart, it's just covering about a year now. So if you zoom in on this, I don't know if y'all can see when I zoom in here, but let me see if I can get that to work. Okay, so if we zoom in on this structure, here's what appears to be a contracting triangle. You can see the market broke right below the lower channel here. This would be wave A, B, C, D, and E create this false break of the AC trend line. Then it quickly and violently reversed. So I took the length on another chart. I took the length of wave B, which is this move right here. This is the minimum required advance to help confirm that we really are starting a new trend. And I took that amount and I added it to the end of wave E. If we add it here, you can see it just reached the minimum target and a little bit extra, and this is on a log scale, in right before time ran out. So that was this pattern thrusting out the minimum required amount of price and time and complexity. Notice the complexity is basically the same. This is a little bit more complicated because it actually declined. I don't think this actually declined. But it reached the minimum thrust of the widest, biggest leg of the triangle added to the end of wave E. So that produced what, in this particular case for contracting triangle, would be stage 1 confirmation. Now that this pattern has been confirmed, we can now take the larger triangle, which is beginning at this high. We have wave A down, B up. Here's the extended wave C. Here's the more drawn out drifting D wave, which is a lot more complicated than the other waves, but it's 3 waves for B and 7 waves for D. And then the E wave subdivides also I think into 7 waves, which is a little unusual, but it finished at a higher low, so all this time consumption doesn't count. Whenever you're dealing with time consumption, you can measure from high to low. From beginning to end can be ignored if the end is higher than the lowest point. So all this would be just sort of extra time that doesn't count against the structure. The more important time would be from here down, which would be similar to the time from A's high to A's low. But all this would just be time you can basically ignore. It's just wasting time, but it doesn't count against the structure. But we take this D wave and we force it to the end of wave E, and this is the minimum price time advance that we need to see to confirm approximately that this neutral triangle is correct. Now, neutral triangles don't actually require the same kind of thrust as a contracting triangle. It's only about 75%, and for expanding triangle, it's only about 50%. So we could shorten this down to about right here. That's the target, approximate minimum upside target that we need to achieve to prove that this neutral triangle is a correct analysis of what the market is doing. And so far it is keeping up with the rate of required ascent. And so I'm pretty happy with the progress so far. It looks even better when you go to weekly charts. But this is an example of confirmation. Is one of the reasons why I was the most confident I've been in a very long time about the S&P structure and what it's doing, because we had this smaller pattern conclude with proper behavior, showing the thrust. And if that is a contracting triangle because it's drifting upward, it has to be the conclusion of a larger correction, which would be this neutral triangle. And the fact the whole thing is drifting suggests that the thrust up is going to be probably as big as this, but it has to be at least 75%, because we're not dealing with a contracting triangle, we're dealing with a neutral triangle. Again, the thrust requirements are not quite as dramatic as what is required out of a contracting triangle. You'll also notice that the market reached the 0B trend line in the same amount of time or less as the previous pattern here. So this would be like stage 1 confirmation. Well, actually, the stage 1 would be breaking above this high. Stage 2 would be breaking the trend line. So it's done those two things, and it makes the pattern look really good. I think that we are in the first really major uptrend that we've seen in a very long time. And the minimum target here would be, I'm not sure what this actually amounts to, but it could easily be as large as this move here. And because the whole pattern drifts upward, it's more likely it's actually going to achieve this, even though right now at this moment it looks like it's behind schedule a little bit. You can see how it's dropping to the right side of this projection line, which is a little bit of a warning that maybe it won't make it, but it could speed up and catch up. It's happening right around the 50% time zone. This is when you're allowed to start slowing down a little bit, but it's a little uncomfortable for me here, so I'm not so sure if we're going to reach the upper target at this point. So I'm going to stick with this as the near certain target that'll be reached. This is a maybe target. This is an incorrect value, by the way. I need to change the data there. Let me put in 3,500 on this chart so we know where that actually is. Okay, so this number is wrong. That's fine, because I changed the structure of this chart a while back. These numbers are not being put in by Excel. Unfortunately, I have to force these numbers on the chart because Excel will not put in numbers at intermediary points. It only puts in the bottom number, and that's it. I would have to have the top I'm not sure what number I'd have to have for it to show the value, but it just won't do it. So I have to, force it into the structure of the chart. I don't know if this is 3,500. Let me just double check on that. So 2,500 is actually way down right there. Okay, so this gives you a better idea of what we're going to see. So close to 3,500 would be pretty much the minimum. It could even exceed it, but it's going to be somewhere in that range. And I'm fairly certain of this. This is the most confident I've been in structure, S&P structure, for a really long time. I think we can get rid of this stuff here. So this is the primary preferred count. And any questions on that before I move on? That's coming in. Let me pull up the weekly chart really quick to show this same phenomenon, since we do have time today more than normal time. This is sort of taking all the stuff we've been talking about and piecing it all together into a cohesive wave count. Now, for those of you who have not, I assume most of you haven't taken my advanced wave analysis class, where we actually go through this kind of stuff in real time. I would take all the rules we've been talking about in the review of the book and start applying them onto real-time charts. So here you can see way back over here, I was looking for the E wave to finish here, and the larger E wave to finish also, which are now confirmed to be over, and the larger X wave. And this was done some time back. You can see it run off the chart. If I updated the chart, you can see it's gone way, way higher. Let me see if I can get this part of it to update too. Okay, so this shows you how much further it's gone. I'm going to undo what I just did so you can see how much data we were missing. So this is what it looked like before, and it was below 3,000 at the time we were expecting the X wave to finish, and now it's reached a high of 3,150. So it was below here when all that analysis, it was right around in here. So it's doing what it's expected to do, and this is all a sign that we're on our way to much higher levels. So I'm going to go ahead and adjust this count. I haven't taught an advanced wave analysis class in a while, so this chart's a little bit behind. It's not keeping up with my own service where I do all this analysis in real time. So let me go ahead and fix these charts real quick. This is the D wave. This is the counter trend move that defines the minimum, the likely minimum upside for the future advance, with some understanding that we're not dealing with a contracting triangle, but it is a neutral triangle, so the rules aren't quite as strict. But this would typically be what you would expect coming out of an upward drifting kind of pattern, a very powerful move. And you can see here how the contracting triangle had a false break right as it was coming to an end. I'm going to merge these two lines together. This should give us a fairly good idea of where the triangle is going to peak, at least temporarily. Okay, so I take a vertical line here. Let's see. It's approximately where the lines converge, and our minimum target would be about 75% of this. Here's the halfway point, there's 75%. All right, there, okay. And we can go further, because this would be a non-limiting triangle. Some of you have asked about the difference between limiting and non-limiting. A non-limiting triangle is a triangle that is not a B wave and not a fourth wave. it happens at the end of patterns, or it happens as a X wave in a pattern. So here is this red contracting triangle right here, and this is the thrust, minimum thrust required out of that triangle. Let me move it back, grab a different. This was the minimum thrust required to confirm on a weekly basis. So this is a more detailed chart. This is the minimum thrust required to confirm that this was a contracting triangle and it produced the proper thrust. And you can see, it looks like on the log scale, it was just a tad bit short. But right at the point of time running out, on an arithmetic chart, it reached it. On a log scale, it looks like it's just a tad bit short. That would be still, in my opinion, acceptable. It did peak right at the right time, went through a correction, and now we're looking for the next stage of confirmation, which needs to be a move about 75% of the width, since we're not dealing with a contracting triangle anymore. And you want to peak somewhere around here, and you also want it to reach approximately this target in about this time or sooner. So what may happen is it may reach this target sooner and peak right around this point here. But we definitely have a lot more upside to go for this structure to continue to confirm. And at this point, it looks fairly certain that it is correct. Get rid of all these smaller patterns. So the E wave, that other pattern finishes here. Probably a little bit higher in reality, but you can see the low there pretty well. And this would be the end of the X wave. And then you get the thrust phase, which is similar to this. So this shows the, so the first phase of confirmation of the smaller pattern, reaching this target just shy of the logarithmic target, but it reached the arithmetic target. And then we have the larger pattern, which is still waiting to be met, and I've taken 75% of that. And so far, it's kept up with that through about the halfway point. So this is the kind of stuff that we do in the more advanced wave analysis class, and give very specific price time targets for things. And if those targets aren't met, then you know there's something wrong with your analysis. So this goes back to the discussion that we were having earlier here, where you have certain kinds of behavior you need to see, and here you need to completely retrace, wave C, or if it's part of a triangle, wave E, in the same amount of time or less. And you can see on that, you can see here we had the conclusion of small wave E and a violent retracement of it. Here we had well, this really doesn't count, but here's wave A, and then you need a violent counter move here. The drops here are generally bigger and faster and not as slow and drawn out. So the trend is down, but the pattern is drifting up. Same thing applies here, where the most violent moves are down. The up moves are bigger, but they're slower. So it's a strong correction. In other words, the market's future strength is really strong. That's why the pattern is drifting upward, but it is a downtrend until here. So the downtrend was in effect during these violent down moves, this one, and then finally we got a violent reversal and a confirmation by this rally and breaking the trend line. So now we're moving upward quicker than we're moving downward, and we're moving upward more than we're moving downward. So the trend has changed. So this correction that began here is now over as of this low, and this puts us in a whole new environment. So we're looking at a move that should definitely be similar to what we had over here. This was the prior correction that we had before this upward drifting X wave. Now, because the X wave drifts, that does imply the odds are fairly good that the future move, and I'm going to make this purple just to differentiate the colors, make it a little skinnier. Okay, so this drift of this pattern suggests that the future move after this is going to be bigger than the prior move. So this suggests that we can take this entire advance and add it to here, and it's not letting me do it because it's going off the page. Let me try that again. I'm not going to be able to get it to match perfectly. It's as good as I'm going to get it. So on a larger scale, it could take a similar amount of time. It could be shorter, it could be longer, but that we might actually get almost a 4 4,000 or so, and maybe that's 4,500. I'm not sure what price that is, but it's a pretty high price, so over 4,000 over a much longer period of time. So this is a very bullish situation. It's the most bullish structure and behavior I've seen in a very long time. It's interesting to be happening at a point where most people are constantly worried about the market topping, about bear markets, about the dangers of the advance. You hear lots of bad news. There's all kinds of concerns going on. So the market just continues to climb this wall of worry, but wave structure is actually very bullish right now, and it's going to be bullish for quite a few months, and it could be for more than a year, which is pretty interesting. This would be 2020, so this would be around the election in the US, and this would be 2021. So this would be a very long period of time possibly. It doesn't have to take this long, but it should get up somewhere in this territory before the pattern is over. It's hard to believe, but that's what it implies. So let me go ahead and close, at least shrink these charts. See if there's any questions that have come in. Okay, so we have a question coming in from, okay, we have several questions. So let's see, the first question was Lowell says, can you show gold and talk about its why have you taken the length of wave C in order to broken the fastest time? I'll have to look at the gold chart in a minute. Let me see if there's any questions about what we're looking at. Hamid says neutral triangle, that is in B. If Hamid, let me unlock your mic because I'm not quite understanding your question here. Okay, so your mic is now unlocked.
Hi, Brian.
So what's your question?
So my question is, why have you taken the length of wave C to be broken in the fastest time? Normally, it's say it's a contracting triangle. It normally has to be the wave E that has to be broken in the fastest time than it took to form. Also,
you're talking about this chart here?
Yes.
Okay. Remember, when you're finishing a contracting triangle or any pattern, you want the new trend to be bigger and faster than the last counter trend move of the previous pattern. Okay, so the last counter trend move, minimum movement would be this move right here added to this low. It did that right away. Most likely in a contracting triangle, it's going to be as big or bigger than the biggest wave. In this case, normally it would be wave A, but in this case, wave B is bigger, so I took the length of wave B. But the minimum actual official requirement is that it's bigger than wave A. So if we were to take wave A and measure that, the contracting triangle, the A wave is usually the most violent move, even if it's not the longest, and that would be the minimum behavior for the thrust after the triangle's over. And you can see it just made it right here at the very last second. It slightly exceeded on a log scale. So that minimum requirement was met, and then I took a little bit stronger requirement, which was taking the largest wave of the triangle, which is the B wave here, and using that and adding that to the end, and it just missed it by a teeny bit. It wasn't mandatory because the A wave is mandatory, but it was super close. So I'm going to accept it. I mean, it was just probably a few ticks off. I'm accepting both of those as confirmation that we have thrusted out of a triangle. If this triangle is correct, which the evidence is super high now, especially because of the channeling of the AC trend line, the contraction on the upper channel, and the false break, and then the immediate reversal, all that is super strong evidence that we finished a contracting triangle. Now we're thrusting out of it. So I think there's no doubt that this was a contracting triangle, and the fact that that's there means it must have finished something larger. It's very unlikely to be the B wave of a zigzag because there's no way you can make this a 5-wave move. So it must be part of this larger neutral triangle that has been my count for, like about a year. And so that means that we need to get a thrust, but the thrust out of a neutral triangle only needs to be about 75%, not 100%. So I've taken 75% of the biggest wave and added it to here, even though technically it could probably be, we could probably measure this move or we can measure this move, but the thrust out of a neutral triangle is not the same as a contracting triangle. It's a little more lethargic, a little less dramatic. Out of an expanding triangle, you don't really get a thrust. You might only move 50% of wave E. out of a neutral triangle, about 75%, out of a contracting triangle, 100%. So we got the 100% from the contraction. We may only get 75% out of the neutral triangle. Does that answer your question?
Yes, but just a quick one. How does it work with the flat and the zigzag? Does it have to? Do we have to make sure that the counter trend action has to be broken the fastest time as well?
Okay, well, here's a hybrid zigzag flat because it's just at a borderline where the B wave is 61%, the C wave makes a minor new low. So this could be a flat or a zigzag, just depends on what wave A looks like. But assuming it's a flat, you're going to break the 0B trend line the same time or less as wave C took to form, and preferably get back to the peak of wave B in the same time or less as wave C took to form. Same thing applies to a zigzag. Okay, does that answer that question?
Right, okay, yes, thank you.
Okay, and then when you deal with a flat or a triangle where it's drifting upward, the first thing you need to do is retrace the last wave, which would be wave C or wave E, in the same time or less, because the channel will be reached after you completely retrace the last leg. So you want to get a complete retracement first, and then this would be a secondary possibility, which is preferred if it happens, but it's not mandatory. It's you know, just enhances the odds your count is correct if you do get to this point. So that's what we had in our S&P situation. Let's see what happened on. I don't have monthly charts going back far enough, I don't think, to see that. Yeah, so we have to use the this chart here. So the time from here to the low, because it doesn't touch anywhere else, this time from here to here is more than the time from here to here. So this was a quicker move back to the 0B or the BD trend line. So this you could say is stage 2 confirmation. Stage 1 would be completely retracing this decline and this decline in the same time or less as it took to form. Looks like a borderline case, but it looks like it just made it right around here where this time was basically equal to this time. And the E wave technically finished at that little bump. If you can see this little bump in the structure right there using the rule of neutrality. So the time from here to here was more than the time from here back to this high, or they're the same or less. So I gave you the confirmation you needed. If it had taken a lot more time, then you would assume that wave E was not over. That makes sense?
Right. Yes, brilliant. Thank you, Glenn.
Okay. Okay, so that takes care of, can you put your mic back on mute? That was Lowell, I think. That was Hamid, right?
Yes, yeah, that was me.
Yeah, okay.
Thank you.
So it takes care of your question. So put your mic back on mute, and let's see. Lowell, can you talk about goal? I'm gonna go to that later. Just a short question, label the ends of waves. Okay, Evgeny, I'm going to unlock your mic here. So can you ask your question so I can better understand it?
Can you hear me, Glenn?
Yes.
I wonder, actually, I would like to make sure that I understand the labeling of the waves correctly. So you automatically label the end of the wave as A. For example, if the following wave, mono wave, retraces faster and more than 100% than the previous mono wave.
No. B waves are almost always slower, even if they're bigger. So if you get wave A, no matter what pattern it's part of, almost always the B wave takes more time and is more complicated than wave A, whether it's bigger or smaller. There's rare exceptions, but it's almost always going to be more time consuming. If B wave takes less time than wave A, then you're dealing with a triangle or a diametric pattern, but it's very rare for the B wave to take less time than wave A.
And what about neutral triangles?
Well, that is a triangle, so it is possible for the B wave to take less time, but again, it's very unusual. And if it takes less time, it almost always has to be smaller. It's virtually impossible for a B wave to take more time than wave A and be bigger. So if it takes less time, it virtually always will be smaller and around 61% or less of wave A.
Okay, thank you. Thank you.
Okay. So that takes care of that question. I think we have one more, and that was regarding the gold market. Looks like Hamid's asking another question. For contracting triangle, it would be wave E to be broken in faster time than it took to form. Yeah, so when you're finishing a contracting triangle, the first thing you want to see is from its conclusion, not necessarily from its high to low, but from its actual conclusion, you want the E wave to be retraced faster than the E wave took to form. That would be the first thing you want to see. It's not necessarily complete confirmation of the pattern because the contracting triangle has additional rules, but that would be stage one. You retrace all of wave E in the same amount of time or less as wave E took to form. And then stage two would be getting to the channel, which will also usually happen right around the same time you reach the length of wave E. And then the other thing is you want the thrust to be equal to the A wave and preferably equal to the largest wave of the pattern, which in this case, it's pretty much both bigger than this and about equal to that. So it's done all the things required, and on the bigger scale, we've reached the BD trend line in the same time or less as it took to form. I mean, the E wave actually starts here and finishes there, so you can see it's much quicker. If you start from this high to here, it's still quicker. So it's done the kind of confirmation we need to see on many levels to suggest that this market has terminated this long drawn out neutral triangle structure in orange, and that we're now in a thrusting phase. It's going to go on for quite a while, which is hard to believe, but that's what wave structure implies. Good wave analysis is not about producing counts that make you feel comfortable. It's producing counts that follow the rules. And this count currently follows the rules. So I'm assuming that it is correct and that the market's going to continue to move up quite dramatically. I'm shrinking this so I can fit it in this little red contracting area. Okay, so this is the contracting triangle in red, and this is the neutral triangle is the pattern in orange. Okay, so Hamid, I think I answered your question. I'm getting rid of that. What is the pattern in wave C? So Abjani, can you go and mute your mic? Let me unlock Mohit's voice. Okay, so your mic is unmuted, Mohit.
Yes, yes. So I just want to know what is the pattern in the wave C of the neutral triangle, and how do you interpret that wave C has ended there at the higher level?
This pattern here?
Yes.
Well, that would probably be a zigzag. I mean, that's not the only thing you could interpret it as, right? The B wave probably finished right around in here. If you go to, this is a weekly chart, you have to go to daily charts. This took a little bit more time than is obvious on weekly charts. Remember, this is a very simple pattern. If it takes less than 13 monowaves, you want to go to lower time frames to confirm and understand what actually happened. So this C wave was a zigzag pattern, most likely on the smaller time frames. This, I think, was either a zigzag or a complex corrected decline. This was some kind of flat pattern, possibly a contracting triangle. I can't remember all the details of this, but either it's a zigzag or it's a contracting triangle. The B wave is a contracting triangle that finishes here. So you'd have wave A up, wave C up, and wave E, which is drifting down, and this would be the thrust out of the triangle. I can't remember all the details, but I prefer to keep the C wave more complicated because you don't want it to be too simple in relation to the other waves. So wave C subdivides similar to wave A. It was the longest wave, and then you have vast complexity differences between this wave and this wave. The B wave and the D wave are more similar, but still the D wave is vastly more complicated. Let me see if we add in the time of all three of these. I can't remember what this looked like. Yeah, so the E wave didn't take more time than A plus B plus C, so it wasn't, sorry, I did that wrong. Didn't take more time than B plus C plus D, which is the maximum allowed time for a same degree pattern. So you can see wave E didn't take more time than B plus C plus D. So this goes back to some of the discussions we had in chapter 4, where you don't want a same degree pattern to take more than 3 times the average time of another same degree pattern. So when you have 3 waves in a row, you can add all 3 of them together. That will give you the average time of all 3 together. And that means that the E wave itself can't take more than all 3 of these added together. It didn't, so it allows me to say that the E wave did subdivide, which was a little unusual for the E wave to get that complicated. But from high to low, time is generally measured from high to low. So the time from high to low is pretty much the same as wave A. If we go over here, time from high to low wave A and wave E were virtually identical. All this would be what you might call just extra time that doesn't count against the structure, but it's allowed because it's drifting up. As long as the conclusion doesn't make a new low, then the time can be measured from here to here. So that this is just wasting time, and then we have the other measurements to help limit how long the E wave can take by taking all of the time of B plus C plus D and adding that to the end of wave D, and the E wave took less time than that, so it is can be considered a same degree pattern, and that's why I allowed wave E to subdivide the way it did. And the thrust has now helped to confirm it all and makes the whole count look really good. So not sure if that answered your question, Mohit, but I assume it did.
Yes, thank you.
Okay, realize this is a very unusual situation, having such, so much complexity happening after A, B, and C. It's a little unusual, but it didn't break any rules. If you go step by step through the rules, you can see that it's all acceptable levels of complexity. Some of it was pushed to the limit, like this E wave almost reached its maximum limit, but it didn't quite get there, so that was acceptable. There was another one, I can't remember, let's see. Yeah, the time of wave D was also another consideration. When you take A plus B plus C and you add it, it was actually, yeah, the pattern, it was a little bit longer than normal. I think I had to, on smaller charts, I had to conclude the C wave at a higher level, because you see this recovery is very slow. It took a long time to retrace this move, which tells you that this C wave actually ended later. I think it was right here, if I remember correct. And that's when you add in this extra time, then the D wave was equal to that amount of time of these other patterns. It was a very strange phenomenon. Not stuff I'm normally used to, but it all made sense when you pieced it together on daily charts, because we were dealing with very simple complexity for a lot of these patterns. So I had to go down to lower time frames to confirm what was going on. And when you finish the C wave here, it increases the complexity of it, and it allows it to take more time. So you can add that time into this pattern here, and then the D wave takes right at, I think, that amount of time from here to here and from there to there. And so it was a borderline case, but acceptable, tolerable. And the other thing, remember, violent behavior is always in the direction of the trend. So we can see the more violent declines and the bigger moves were going down. This was larger but slower, indicating it was counter trend. Then you got a nice decline again, a more violent decline again, a more violent decline again. So it kept telling us the trend was down until just recently. And when you go to monthly charts, it starts to become obvious that we're finally getting behavior that's, where's that chart? We're starting to finally get behavior where it's moving up quicker than it's been moving down. So now we're getting quicker up movement and slower, smaller down movement, which is a sign that we're now in a new uptrend instead of in a downward pattern that's drifting upward. So now we're in an upward pattern that's drifting upward, which means it's going to be pretty strong and take quite a bit of time, as hard as that is to believe. Okay. See, you asked another question about the retracement of wave E in a weekly chart, not the same.
That was answered.
Say it again?
Yes, that was answered in the previous questions.
Okay. Okay, Hamid, let's see. Okay, you already said thanks. I assume I answered the question. Okay, so let's go on to Lowell's question relating to the gold market, because this is all about confirmation, and confirmation is what chapter 6 is about. So I think it's important to actually see some of this in real time. And that does finish the, completes chapter 6. So I'm going to go ahead and close that. Let's see. So Lowell, what time frame are we talking about for gold? I assume it's got to be 6 month or maybe monthly, but probably not anything shorter term than that. I'm going to go and unmute your mic, Lowell. Okay, so it looks like your mic's unmuted. Can you tell me which time frame you're talking about for gold? You need to unlock your mic on your end unless you don't have a mic. Okay, monthly. Okay, so here's the half yearly, here's the monthly. Okay, so are you able to talk, Lowell, or is it not possible? Because I can't hear anything. Looks like your mic's not working. Okay, so can you ask your question? Because I'm not quite sure what you're asking. I mean, I guess I could just talk about it generally. You can see here that wave A was very large and violent. It looks like a corrective rally, and it's confirmed because this drop is more than 61% of the rally. So we know based on this, most likely wave A is corrective. The conclusion of this, I actually called to the day. None of y'all would have been taking that class at the time, but on weekly and daily charts, this structure concluded right here or right here on weekly and daily charts. I think it was right here. And it was the end of a terminal pattern. So we had a flat with wave A, wave B up, wave C, and this C wave was a 5-wave movement. It was a terminal with a 5th wave failure. The minute it finished, the market just skyrocketed. And so we knew about this before it happened. And for those who were taking the class, caught a very nice advance. So this advance puts wave 1 up at this high. Sort of looks like a 5-wave move with a first wave extension being here, and notice we went back into the range of wave 2. Wave 2 took the same amount of time or more as wave 1 if you measure from this point. Wave 3 looks like another 5-wave move, finished up at this high. Based on the amount of time we spent correcting, we now know we're in a bigger degree, so we're working on wave 4, which may or may not be finished yet. Let me go ahead and measure this third wave itself. Hold on, I gotta copy this. So you want to measure, remember we have minimum rule behavior requirements for fourth wave of pattern you want it to take is longer than wave 3. So if we're in the fourth wave, we know it needs to take at least until here. Okay, so wave 4 can't be finished yet, it can drift, it just can't conclude. So we're waiting for wave 4 to reach this line right here. When it does, anytime after that, wave 4 can be finished. And once wave 4 is finished, then we need to have one more advance for wave 5. The third wave appears to be the longest, so we would assume that wave 5 would be equal or similar to wave 1. So I'm going to go ahead and measure that. That's approximately the length of wave 1. This is the approximate time. Now wave 5 could take more time, but it should be similar in length to wave 1. So something like that, which means it may go a little bit higher. It probably will break above this trend line comfortably just to create a false break of the trend line and getting people bullish right at the tail end of the wave B. This is a counter trend rally that's been going on for a very long time. This shows the time of large wave A and the time of large wave B. This is the minimum time for large wave B, because in probably 90%, 95% of all cases, the B wave will take more time than the A wave. If the B wave is going to be a complex correction, we'll have an X wave after and then another ABC. If the market goes really comfortably above this channel, then most likely wave B will conclude when that happens, and then we'll start the next phase of the bear market. So I'm not sure if this is answering the question that you're asking, Lowell, but let's see, you send another question in here. Okay, I'm talking about gold. Is B ready to be completed? Do you anticipate a large? Okay, so the B wave can't finish until we finish wave 4, and this is going to take maybe another half a month to a month or more, and then we're going to take a few months to get wave 5 to new highs. So we're easily into early to mid next year before wave 5 and wave C and wave B could finish. So I assume that answers your question, Lowell. Okay, as far as the time of wave C, all I did was notice that wave A took very little time in relation to wave B, which I don't know why the B wave's here. Let me make these stand out a little bit because they don't stand out too much. Okay, so I bolded them a little bit so you can see that this is A, B, and C. So you can see A was very quick, B took a lot more time. So you add them together, I measured it from the lowest conclusion point and the lowest start point. Added them together, divided it by 2. They gave me a target date. We're clearly going to pass this target date, so we may have to rejigger the way that we're measuring this, and it's possible, not mandatory, but it's possible that wave C will take the time of A plus B, but that's going to stretch it out, comfortable amount of time more. Secondary choice is that instead of adding the time to the low of wave B, secondary choice is added to the end of wave B, which is either here or here. So if we add it to here, then it starts to look almost exactly like our forecast. So that makes me happy because it starts to mesh better with the other analysis. So I'm going to take the time of A plus B divided by 2 instead of adding it to here, because clearly it's going to finish after that. I'm going to add it to the conclusion of where it appears wave B finished, and that's an alternate secondary option. If it doesn't work from the lowest to the lowest point, or the highest to the highest point, then you can move that same time measurement. You're not going to change the time measurement, but you move that same time measurement from where you had it at the lowest point to the conclusion, and so it gives us a little more time and looks more ideal in the bigger picture. So that's what appears to be the best guess now for the conclusion of Gold's rally. Mohit has a question, so I'm going to go ahead and put your mic on mute, Lowell. We have to end the class here, but can wave 3 subdivide before completely retracing wave 2? Can wave 3 subdivide before completely retracing wave 2? I don't quite understand that question. I just unlocked your mic, so if you can unlock it, Mohit, can you?
Yes.
Can you
so
explain what you mean?
The extended wave 3.
Go ahead.
There is a subdivision before the wave 2 is completely retraced.
Can you tell me where you're talking about on this structure here?
Yeah, this one. Yeah.
Here?
No, the correction before it. This
Here?
one, yes. Yes.
Okay, so what about it?
So this has subdivided before the wave 2 is retraced completely. So is that fine?
Okay, remember, we're dealing with monthly wave structure, so you can have, because this is a very simple advance, there might be hidden price structure. We can't see. Wave 2 could have been bigger than we can tell, because depending on how the month unfolds, the low of the month may have been here, like one day before the month was over, and then the new month starts and it shows it is here. So you could have had the low here, the high here, a future low here, one day before the month's over, and then the next day it's up here and it doesn't show that reaction. So realize when you're talking about simplified structure, you can't necessarily trust what you see. You have to get more details. So you're looking at this 5-wave move on a weekly chart to see what really happened. And it's possible, wave 2 finished higher. It's possible this was deeper than it appears. There's all kinds of stuff that we can't really see and be sure of. Okay, but I know that I went through the trouble on weekly charts to make sure that this made sense.
Okay. Thanks. Yep.
Okay, so that takes care of that question. So go ahead and put your mic on mute again. Patham says, is it possible that wave B is a triangle? Is it possible that this? Yeah, that's an interesting thought. That's very interesting, actually. I never thought about that. Oh, actually, I did. So here's account where I consider that possibility. So based on what's happening, I guess it technically is possible. We'll have to see how the future progresses, but let me grab this and move it down a little bit. What I want to do with this is measure the A wave. And after this, we're going to have to call it a day. So this would be wave A. This would be the wave you typically want to measure for your thrust. I mean, it's right there. So it's moved just as much and faster than wave A. So that actually technically means it is possible that this could be wave 1, which I've already thought of here, wave 1 of a C wave terminal. And that means if this is the case, then this pattern would drag on for a lot longer period of time. So it could, be equal to A plus B divided by 2. So it would push it over into this territory over here. Let me see if I can approximate that. So that's A plus B divided by 2. I'm going to move its start price as high as I can. It's not going to allow me to go all the way. and this is halfway time. So this would allow it to go through a 2, a 3, a 4, and a 5, and so it would drag on time quite a bit. So yes, apparently it is possible. This was a contracting triangle. I'm not crazy about the way the C wave looks. It looks pretty small and pretty simple. That would concern me a little bit. So I do prefer this count for now, but it appears it's at least plausible, especially because the thrust was equal to the width of wave A. Now, the A wave, I also don't like that the violent part didn't start until here, which means technically, most likely, the A wave would be moved to here. And if you move the A wave to there, that implies weakness. The market did not show signs of weakness because it immediately exceeded this high during the B wave rally. So there's a lot of bizarre contradictions that would happen. So I definitely still prefer this scenario where the A wave wouldn't have to be in an instantaneous violent decline, which is what's required when you start the A wave of a contracting triangle. You wouldn't want to start off slow and then all of a sudden get more violent later. You want the start to almost immediately be violent. Think of the crash of '87. That's the kind of behavior you get on a smaller scale or a bigger scale when you start a contracting triangle. Okay, we're running way past time here, so I'm gonna have to call it a day. But that gives you some examples of what confirmation looks like on charts and how it helps to solidify patterns. And we also went into some other details we normally don't do, but give you an idea of what the advanced wave analysis class is like for anybody who's interested in learning to apply all the stuff that we're doing in this class to future charts or to real-time charts. Okay, so let's call it a day, and I will speak to y'all next week. I'm glad that the recording actually and the mic worked today. So thanks a lot, and y'all have a good weekend.